Good morning, everyone, and welcome to episode 2 of the Weekly Outlook series. I will be going over the economic calendar for this week and the days I will be trading and not be trading for this week. And I will be doing a update on the draws on liquidity that I called in advance last week and what happened and what I'm expecting and aiming for this current week. With that being said, let's get right into it. So Monday, we have news at 5:30 a.m. It is an orange folder, which is technically an okay day or something to look for in 9:30 opening. But I want you guys to pay attention to what we have here on Tuesday. We have a red folder, NFP, which is the non-farm employment change. Excuse me. So when it comes to NFP, CPI, and FOMC, I do not trade the day prior to those news releases because those are such high impact news releases. The day before tends to be choppier than other days. Now, is it impossible to find a good trade on a day before NFP or a day before FOMC or CPI? No, it is not. But it's much more probable that price action will not be favorable. So in this game, the best thing to do is to protect capital and to avoid days that we know that we can expect high resistance liquidity runs. And why would you want to be in an environment when you know that high resistance is high probable? Instead, wait for the low resistance liquidity runs that is going to form after the NFP. We even have right at the 9:45 macro, my time 6:45 in New York local time. This is 9:45 a.m. We have another news release. So this is the 8:30 news release and the 9:45 news release here. So I will be avoiding Monday. So I will not be trading Monday, and I will be waiting for the minimum this 9:45 news release to occur. Then Wednesday, we have news at 5:15 a.m. Orange folder, which normally is a day that you would wait for 9:30 volatility to come into the market and then look to hunt from there. But again, we have to pay attention to the economic calendar because this tells us what days to trade and what days not to trade. Here on December 18th, we can see we have a tentative, which I really do not like, a CPI news release. Not only do we have unemployment, we have a tentative CPI news release. Again, 5:30 Western time is 8:30 New York local time. So I will be waiting for the minimum 8:30 news release to be released, and more favorably the 9:45 macro, 9:42 macro to be exact. But because Thursday is a CPI day, as I stated before, NFP, FOMC, and CPI, the days prior to those news releases, I do not trade, and I do not recommend anyone that wants to abide by my rules and what I believe in, what makes these markets move, to not trade the day prior. Yes, again, it is possible to find maybe a trade, maybe not. But why waste the mental capital, guys? So again, we are not trading Wednesday and Monday so far due to CPI and NFP in the same week. And now Friday, we have 7 a.m. Western time is 10 a.m. New York local time. We have two orange folder news releases. So personally, I will be waiting for the 9:30 volatility to come into the market. And then if something presents itself in the first 9:42 macro be prior to the news released at 10 a.m., I will consider that a favorable environment to take a trade, and therefore Friday is a trading day. So to recap, Monday is a non-trading day due to the NFP news release. Tuesday, after the news release for NFP, preferably after this second news release as well, to take a trade. Wednesday, December 17th, is a non-trading day due to the CPI news release that we have on Thursday. On Thursday, I will be waiting for both of these news releases to be out on the market. Preferably, I would be waiting for the 9:42 macro Same thing goes for Friday. With that being said, let's get into the charts. Now, I left the draw on liquidities on the chart that I have posted for last week, just to show that at least one of the targets that I called in advance did get hit. And then after that, we had an invalidation. This is why you build a narrative prior to the week that you're going to trade. You put your draws on liquidity, and from there, you write your invalidations out. You know your points of interest, you know when to trade, you know where to trade from, and you know what invalidates your trade idea. With that being said, we did reach our first draw on liquidity, which was the previous weekly high, and that was on Wednesday after the FOMC release during that last power hour macro, which I personally did execute myself from a point of interest that I called on the hourly time frame, which I will go into later. Currently, we are underneath this busy that I had marked out on the daily time frame that I wanted to see us to stay above to come into this first draw that I have noted here, which I will now remove. The higher end of that SIBI, this volume imbalance, the previous monthly high, and inevitably the all-time high. Now, with the way we have currently opened up in this week, we have created weekly SMT here with ES, and we also have the SMTs here at the high. In my opinion, the higher time frame on the daily is out of sync, where the Nasdaq is calling for lower prices and the ES is calling for higher prices, until either the Nasdaq closes back above this busy, and to be more exact, I will give you the exact PD array that I'm paying attention to on the lower time frames. But because we retraced in below this busy to create this weekly SMT here that closed above this busy would validate this weekly SMT, and then I would be expecting price to drop back into these highs here, here, and again, these highs here that I've been calling. What I would be paying attention to this week is how we treat this daily busy here. If price decides to, one, keep this weekly SMT intact and respect this daily busy and close back above the monthly open and this busy here, then I would consider that a buy program again on the daily time frame for Nasdaq. Now, with that being said, let's break it down on the 1 hour time frame to confirm further and the 4 hour time frame. So when we drop down into the 4 hour time frame, we can get a closer look at to what price action has done and what it can do. Here in this green shaded area, we have the daily busy and the candles closing inside of it on the 4 hour time frame, respecting it. We have this weekly SMT. Now I want to point out this SIBI here. We're going to mark out that range. 50% of that SIBI is what I would be paying attention to. If price can close above 50% of this SIBI and stay inside of this range, respecting this daily busy and validating this weekly SMT, I would expect these same points of interest that I've given before to be displaced above and then act as support to continue higher into those daily PD arrays that I have here and the draws on liquidity. But at the current time, nothing is certain. And because of that, I will not be trading Monday. Even if there was no CPI or NFP the day before, because of the higher time frame being out of sync, that would make every other lower time frame move less probable. Knowing when to trade and when not to is going to save you a lot of headaches, and it is going to save you a lot of capital and actual P&L that you can save for when price action is a lot better. With that being said, let's break it down again one step further into the 1 hour time frame. Mark this line here. So we know that that's the equilibrium of the 4-hour CB. And then we're going to break down into the 1-hour time frame. And one thing I want to point out here, if we pay attention to this candle at the 15 o'clock New York local time, and this 1-hourly candle that was the weekly open, opened low. We created SMT here with ES. If you pay attention to the 15 o'clock hour and the 18 o'clock hour candles on Nasdaq and the ES, you will see that we have a cracking correlation at these lows. We wait for some sort of swing high, which we see here. Put that in black. And this is all forming inside of the daily BISI. We form relative equal highs, this being the swing high at a power 3 time, which is also important. This 3 a.m. hourly candle, let's actually make this a different color since my candles are green. It's actually bothering me. Let's go ahead and make this a lighter color. Excuse my LCD. Here we have equilibrium. So I'm going to go ahead and write it 2 here. We have SMT here with ES. And here we have our change in state of delivery. Validating these down close candles, which would become an order block. You can take the high, or you can take the opening price. I prefer the opening price of this consecutive down close candles in the hourly time frame, which is an order block, because it forms the SMT and the CSD in the same leg. So now, as long as we stay above this candle that creates the CSD, to be even more exact, I would be expecting higher prices. Even though I'm expecting higher prices due to the current price action here, I am still going to wait for Monday's close to come, because the higher time frame is out of sync. Even if I'm expecting price to expand higher after retracing back into this PDRA, closing back above this, and then using this exact same PDRAs that I had pointed out for the week prior to form a higher move, I'm still going to be avoiding Monday and the bare minimum waiting until Tuesday to take any trades. With that being said, I'm going to end this weekly review here, because price action needs to give me more data in order for me to be more precise with that price action that we are currently seeing. If you want to stay up to date with my invalidations and what price actions and what PD arrays and what time dimensions I'm looking to trade, feel free to click on the link in my descriptions and the link in my bio for the Market Maker School, where you get daily reviews and daily points of interest and daily calls, and you'll be able to see once myself and some of the other mentors are taking trades and what we're expecting and what we're looking for live during the New York session. With that being said, good luck and good trading. And if you have not yet seen my execution from the PDRA that I took here on Wednesday after the news release to target the high of last week, I literally entered inside of here and exited at that high. I caught majority of the expansion, and the low where I wanted it to form happened here. After that, someone invalidated the price action, as you can see here, and which is also why, if you go back and look at their weekly outlook series episode 1, I said that this was the invalidation level, and that once we close below that I would have to wait for the price action. And that is exactly what I'm doing. I am avoiding Monday. I am waiting for Tuesday. Learning when not to trade, again, I cannot emphasize this enough, is going to save you more than you could imagine. Stay disciplined, stay consistent, and if you want to watch over my shoulders and everyone else in the Market Maker School, click the link in the descriptions. And just to show a little bit of proof of the executions that myself and other members take, this is the Market Maker School Discord. This is the free section where everyone can see. Then we have a private space where we are updating everyone here on weekly outlooks, just to show you an execution of what I was explaining earlier inside of that point of interest. As you can see here, I entered here, took a partial here, and exited at the previous weekly high, which ended up being the high of the week and the current previous weekly high. Real traders trading just like you.